I'm going to be reviewing why I stand behind my prediction more now than ever that the real estate market in many, if not all areas, is doomed. The stimulus will not work. And why the next 6 weeks will likely be the most important in US financial history. That's right, guys. I'm going to touch on what you must actively be doing before it's too late to make all of this actually a good thing for your household in the long run. Hey guys, welcome back to the channel. Matthew here, your cash flow coach. And here's the thing, guys. I've been teaching ordinary people how to create extraordinary wealth since 2001. I've taught hundreds of classes. I've taught for NASA Space Centers at Johnson and Kennedy. I've taught for the police department. I've taught for RE/MAX, Coldwell Banker, Keller Williams, Chicago Title, most of the largest real estate investor associations across the country. I have a lot of experience in both the good times and the bad. And I have some very important opinions about what we are facing today and why I think the stimulus is going to act just like a Band-Aid would if you cut your arm off.
'Tis but a scratch. A scratch? Your arm's off.
It may slow the bleeding, but as far as the long term is concerned, it is ineffective. I'm going to be reviewing why I stand behind my prediction more now than ever that the real estate market in many, if not all areas, is doomed. I'm going to be discussing with you why the recovery will be a U-shaped recovery, not a V-shaped recovery. I'm going to take a snapshot look at some of the arguments for each side currently, because while analyzing and prepping for the worst is intelligent and it's the wise thing to do, I prefer to hunt for the bright lights at the end of this tunnel. Imagine if this pandemic, just imagine for a moment, that it turns out to be the very, very reason that you can end up making twice as much money as you've ever made before and never have to go back to that job that you hate ever again. Now, from what I've seen over the past 6 weeks, the primary contingency that we all seem to agree about that will determine the overall severity of this situation, as well as the duration of a full recovery and eventually beyond, boils down to the timing and the approach behind the reawakening of the US economy. According to a new survey by Main Street America, 7.5 million small businesses will close permanently if business disruption caused by COVID-19 continues unabated. Not only has the PPP, the Payment Protection Program bailout of businesses, fallen well short of the needs for small business owners, and it's already run out of money. Sadly, more than 22 million Americans have already filed for unemployment aid since President Trump declared a national emergency, which is a staggering loss of jobs. It's wiped out an entire decade of employment gains. The United States has not seen this level of job loss since the Great Depression. Now, while we've already seen record layoffs and unemployment numbers, the speculations about the second phase of unemployment is that they're going to be even harsher. So it seems even worse is yet to come, guys. Now, we know with absolute certainty that the consumer markets in nearly every single sector, including real estate, are facing a very dark future right now, especially if we can't reopen the economy soon. Another huge factor that's going to play a major role in a long recovery and an unprecedented real estate crash coming is that as of April 16th, Black Knight estimates that there were 2.94 million homeowners who had entered into a forbearance agreement, temporarily delaying or reducing their required monthly mortgage payments. While this is certainly the only option right now for many people, it's obviously a Band-Aid, and it's imperative that you realize the grave risks that are involved with that. If you take a forbearance, you will owe the full amount in a lump sum at the end of the forbearance period. For me, that total is $2,713 times 13 payments, all at one time, which totals $35,000 plus. Some banks may choose to renegotiate or even modify, as stated in my brief 3-page forbearance agreement here after my call with Arvis last week. But here's the thing, they can also choose to foreclose on you. And the fact is, you'll leave that up to your bank. That's not a position that you want to be in, which is why we've chosen to pay every single dollar that we owe on a month-to-month basis, even though this is an Airbnb I'm sitting in right here, and we are currently prevented from renting this place out. Now, even though the government, through the CARES Act, claims that there are 12 months available, we've seen through you, our audience, directly that this is not true. Some banks, like this one left in the comments of our forbearance video by Daniel Kruger, said that his credit union will offer only a month-to-month through manual approval only, but only if they are able to see evidence of either positive COVID testing or income loss to approve. Now, let's say that you accept a forbearance and you can pay the full sum throughout like we're doing, or at least you pay by the end, okay? You somehow come up with $35,000. You may harm your ability to qualify for other types of lending that could help you in the future. Furthermore, there's speculation that there would be a direct hit to credit. And even though it doesn't affect your scores, it might be visible to other lenders, making it, again, difficult to get loans. So it's clear that forbearances really need to be used only on an if needed basis in order to avoid potential harm. But let's face it, those that need it most are the least likely to be able to afford a lump sum payment by the end. It's an obvious catch-22 for everybody, and it's a no-win for the banks and the mortgage servicers either, guys. I mean, I expect banks and lenders to see more bailouts, obviously, than the little guys like us, but I still see a major disaster in the future for them too. Yet, the current unpaid principal balances of those mortgages right now is $651 billion already. When you watch the video of my phone call with my mortgage lender and you realize that they have also agreed to cover my taxes and insurance costs for that 6 months, then 1 year eventually, I can easily argue that new waves of real estate related hardships are inevitable. We will most prominently start seeing the adverse effects of these forbearances when the first large wave are called due in 90 days. Then again, I forecast we'll see it in 6 months and then a final surge again in 1 year, which will mark the phase where the government is either going to need to step in or a massive collapse is realistic if it hasn't already started by then. Now let's take a moment and play the angel's advocate like I promised. Let's review the best arguments that the mortgage and the housing markets can actually endure this. Mortgage standards are not like they were in 2008. That's argument number one. That's true. Lending guidelines have been much stricter and they have only become more stringent as of late, which means that there should be a much larger cushion for banks to protect themselves, okay? Now, I don't see how the banks are going to protect themselves from what we just talked about, but we're going with that. Now, some argue that prices are also not spiraling out of control. They are in my neighborhood, so that's hard for me to understand too, but appreciation over the 6 years leading up to the Great Recession compared to the past 6 years is different. Yeah, I mean, it's been more modest inclines, but it's still above the average 3.6%. There is a shortage of homes on the market. Yes, this is the most common argument from my opponents in this category. Anything above 6 months inventory typically causes a decline in prices, whereas anything less causes an appreciation. Currently, we're at 3.1 compared to 8.2 months in 2007. Now, housing has remained more affordable than in 2006. Affordability is calculated on home prices, interest rates, and of course, income levels. Obviously, I think a lot of that is going to be affected here coming up. And the final opposing argument today to my predictions that the housing market and the mortgage markets are facing total demise is that people are equity rich. People famously used their home equity back in 2007, along with high lending loan-to-value guidelines to tap into their property like an ATM machine. And this has been more difficult to do this time. Now, with all of that being said, each of these positive factors are really only temporary as we move through the pandemic with more and more people losing their income. And even if the economic revival is executed perfectly, the experts that I trust most unanimously agree at this point that our recovery now will be a so-called U-shaped recovery at best, where a rebound in business and consumer activities from pre-crisis levels is going to be long and slow. And while bigger miracles have certainly happened in history than these predictions being wrong, and while looking at things with a pessimistic and prepper outlook seems negative, I'm going to continue to push you guys, all of you, to prepare for the very realistic probability that life as we knew it is over. And I understand that that can seem scary and it can even maybe feel a little hopeless, but it doesn't have to at all. There are so many rays of light if you focus your attention on the right things. Financially, the single best approach right now is to adjust and stay ahead of this thing by taking control over your personal circumstances. Start by staying super honest with yourself. Have you guys been using this lockdown right now as time off, where you're enjoying your newfound time to reconnect with your spouse and your kids? Have you been able to evaluate and appreciate the small things that maybe we were taking for granted for a long time? Those are obviously really, really good things. But if you're not also spending as much time as possible working harder than you were working at your job before the crisis hit, you're missing a huge opportunity right now. I mean, Buffett famously says, when the tide goes out, you'll see who has pants on. And preparing now and taking action now, these are going to separate the winners from the losers as this thing all shakes out. Getting your finances in order. I'll put 2 of the videos that we made below on how to do that immediately. The first one is going to be discussing how to get your budget and your spending and your earning power in order. The other shows how we use credit to shore up as much available liquidity as possible right now by doing these 2 things diligently, as if our lives depend on it. Because guys, guess what? Quality of life to me is the most important aspect of being alive. It allows for us to press forward and create new ways of adapting and making money. Now, this Airbnb that I'm sitting in right here, okay, this is a great example. A great way of making money before, but not so much right now. But it's still my prediction that short-term rentals will be one of the best ways of making money in the near future and won't require a lot of money. In fact, subscribe now to see what I think of short-term rental arbitrage. Okay, I think it's going to make an epic comeback when COVID is behind us. Until then, make sure you claim your free coaching session at freecoachingcalendar.com, and I'll be sure to guide you each based on your unique circumstances towards new ways to make money and be glad that you were able to leave that job you hated behind. I want you to study now like your life depends on it, and I'll look forward to seeing you on those next videos. Until then, again, remember, be a subscriber. You can win contests like this recent AirPods Pros giveaway that we just hosted. Congratulations to Jason again on winning that. That was amazing. Guys, I look forward to seeing you on the next video. I love you all very much. Please stay healthy. We'll see you on the next video. Bye.